Welcome to our first quarterly review for 2020. I'm Janet Kim Singh, Portfolio Manager on the Private Wealth team, and I'm joined here by Maria Dawes, my colleague and fellow Portfolio Manager. And we have with us today a special guest, and that would be Glenn Murray, our Chief Investment Officer and President at Capstone. Welcome, guys.
Thanks, Janet.
So Maria, why don't you kick us off with the first question that we have for Glenn today?
Sure, Glenn. So a lot of media are talking about COVID-19 and everything surrounding it as being a black swan event. Can you give us the definition of what that is and whether or not you agree?
Thanks, Maria. Media, governments like the buzzwords or phrases. I'll focus in on two factors of the definition around black swan. First and foremost, it's an event that has an extreme impact. I think we would all agree that COVID-19 has had that extreme impact. So we definitely meet that part of the definition. The second part of the definition would be that it's an event that lies outside of regular expectations. But more importantly, there needs to be nothing in the past that could point to its possibility. And I think that COVID-19 fails in that definition when you consider things such as SARS or H1N1, Ebola have all been fairly recent events that could have been indicators to the future of a pandemic event. So I don't think that COVID-19 actually fits the definition of black swan. Having said that, though, obviously it is a significant shock. It's a major impact in the world. And the significance of that impact on people's lives, their livelihoods, and on the economy is significant.
So switching gears a little bit, people are also referring to the oil disputes as sort of another black swan event. So how has this oil dispute overseas affected our Canadian markets this past quarter?
Well, there's really been two contributing factors or two shocks that I'll quickly mention. The earlier one in the cycle here, or in the season, maybe is a better way of putting it, would be the dispute between Russia and Saudi Arabia. That dispute led to both countries entering into a price war, which essentially means that they were just drilling and putting more supply of oil into the marketplace. After a little while, that was kind of brought to a resolution, but led straight into the next reality, which was the complete disruption of demand for oil based on the global economic shutdown that's occurred. That has meant that with all that extra oil being brought out, we're really running out of ability to store a lot of that excess supply. As most people would be aware, the Canadian economy and stock markets are really intertwined in the oil and gas industries. Therefore, when you start getting shocks both to the supply side and on demand, price variability all over the place, that has a significant impact to both our economy as well as performance and volatility on the stock market.
Thanks, Glenn. Obviously, we've had the shelter-in-place order. Most regions have in North America specifically. So can you talk about what some of the various governments and central banks have done in response to this?
Yeah, we've seen countries around the world respond with various levels of both monetary and fiscal policies in response to the situation. So on the monetary policy side of things, really depending on which country you're looking at, we've seen various levels of aggressive moves in reducing their policy rates, as well as entering into the credit markets and providing support to by purchasing a broad range of bonds. Canada followed suit. So Canada very aggressively, the central bank moved out of the gates with the whole pandemic situation, reducing our policy rate down to 25 basis points. And they have also entered into the credit markets to provide support for the market as well as liquidity. I believe the Canada Central Bank's approach in this situation was swift. I think it was necessary, although not as necessary as fiscal policy in this particular type of situation. But going forward, probably will require further intervention. On the fiscal policy side, we saw governments also entering the market with fiscal stimulus, geared mostly towards businesses and individuals. And it looks different in each country. Everybody has a different process or plan in order to assist their economies. Those plans are never perfect. They're thrown together extremely quickly. But the key is getting the money, getting the stimulus into the hands of those that need it quickly and as efficiently as possible. And that has looked different country to country. My sense is that here in Canada, although the response has been reasonably large from a standpoint of Canadian GDP or percentage of Canadian GDP, we have been particularly slow in getting it into the hands of both businesses and individuals. And in this particular type of climate, kind of every week that is delayed or all the time that it takes to actually get it where it needs to go will have an impact at the back end as we move forward.
So Glenn, what do you think recovery is going to look like then? Do you think it's possible for us to have a quick recovery, or are we looking at a sort of prolonged recessionary period? What do you think?
Yeah, you know, we're still in a season of fairly extreme uncertainty. So it's very difficult to know what this outcome will look like. I think we can say though with confidence that we're going to enter into a recession, or we'll probably as soon as we get 2 quarters, we will be in a recession. So I think we can say that we'll be in a recession. The significance of that recession and kind of the length and how severe it is, I think that's still undefined at this point while we are still in this lockdown. The best case scenario would obviously be a quick recovery. And I see that really being heavily reliant upon the success that, in this particular case, let's say the success that Canada has in keeping businesses around. The more businesses we have once we start to open up the economy, the quicker we can get people back to work and the greater likelihood of having a quicker turnaround or a quicker recovery. The problem is that if you don't get the funds into the hands of the businesses prior to some of that release of staff, and that can create rehiring delays and so forth. So recovery is very, very key to how quickly businesses are able to either be around or get back active in the rehiring. Unemployment will be key to this recovery scenario. So the more people we can either keep employed and or quickly re-employ at the back end will be a key contributor to the success or maybe the speed of the recovery as we start to open up the economies, both in Canada, but that will be the same on a global level as well.
Thank you, Glenn. So lots of uncertainty, that's for sure. Let's switch gears slightly and talk about the new pool that Capstone launched last fall, the Capstone Private High Income Pool. I know a lot of people are interested in knowing what has been happening there. So if you could give us a brief update, that'd be great. Yeah,
it's an exciting opportunity. I like it because it enters a broader, more global focus with our platform of opportunities. It's a strategy that focuses primarily on asset-backed debt, providing that consistent stream of income with the uncorrelated low volatility investment strategies that we tend to employ. So the strategy has performed well during this period of time, and during the volatility, it continues to pay out its quarterly distributions. In conjunction with our partners, that portfolio has been stress tested to ensure that the loans are well covered by collateral. We've also looked at the cash to ensure that on a number of the loans, we have kind of ongoing funding obligations that are agreed. So we ensure that there's cash reserves available to meet those obligations. So we feel, having done that stress testing, that the portfolio is well positioned to navigate through this season of uncertainty and volatility. the results of those stress tests provide us comfort that the portfolio will be able to continue to distribute cash on a quarterly basis as it has, and to be kind of stable during this extreme period of volatility that we've seen. So a continued nice addition to a balanced portfolio to provide that balance of income coming in.
So Glenn, perhaps you can talk a little bit about our Capstone fixed income pool. We did see a little bit more volatility in this first quarter, so your comments on that?
Yeah, so the fixed income pool is our only strategy that is a hybrid. So what I mean by that is we have both traditional bonds and fixed income strategies in there, our investments, as well as non-traditional. So as we went into this period of volatility, our traditional side of that portfolio, it had a very similar experience or very similar volatility as to what we've been experienced in the traditional markets on our traditional side of the portfolio. So the fixed income demonstrated or experienced a little bit more volatility than our other income strategies because of that. In addition to that, we have some non-traditional strategies that we're ready to invest in, but the capital hadn't been called. So we did enter 2020 with slightly higher traditional holdings than we would have in the kind of medium term, which those also added a little bit to some of that volatility that we saw in March. So we actively have adjusted our positions to remove some of the volatility, but also ensure that we're positioned for ongoing upside as things start to turn around or stabilize.
Thanks, Glenn. I know in almost every period there is opportunities as well. So can you comment on what your view is on some of the opportunities that we're seeing?
Yeah, it's going to go through seasons of initially just kind of looking at where you are in the portfolio, making sure that everything's kind of stable and where your current positions are, and then you start to refocus and see what opportunities can be brought in. So we continue to like investments that have income or cash flow that is contractually obligated and asset backed. That tends to be one of the things we often look for, and it is still one of the areas that we would see as attractive at this time. We're looking for sectors that will benefit in the recovery. So where are the things that governments may need to invest in or look at? Where are we going to get some stimulus coming into the economy or the market? Like things like infrastructure, items like domestic food and health security, supply chain protection are obviously things that are being kind of headlined right now or laid to bear as areas that need to be addressed. Out of the early part of this cycle, we saw corporate debt markets, the spreads between them and the sovereign debt spread out quite wide. Particularly in the US, the Fed has indicated strongly that they'll be coming into the corporate debt market to provide liquidity and support to that market, which has kind of bolstered that. So we do see some opportunity going forward in the corporate debt side. And we are actively reviewing all our holdings kind of to look for opportunities in all of our strategies where we may overweight something that we're already in, or look to see which one of our opportunities is well aligned with some of what we see in the future, and we'll be making some strategy changes or additions or shifts over the next few days and weeks.
Great. Glenn, thank you so much for joining us. That was really helpful, and we'll let you get back to work now.
Thank you. Thank you.
Janet, did you enjoy that? I think that was really helpful, and it gave us some broader perspective on what's been happening this quarter and where some opportunities are as well.
Always a pleasure to hear from Glenn Murray, our Chief Investment Officer and President at Capstone. So yes, I think it's you know, obviously we are speaking with Glenn very regularly, but we always enjoy having him and hearing his thoughts. And I hope that our viewers enjoyed that as well. So we will be continuing to do these updates, shorter updates on a weekly basis. For now, I think we'll leave it there. We hope you guys have a great rest of the day and that you enjoyed this, and we'll see you next time.
Bye now.